Let's talk money.
Hello and welcome to a brand new edition of Let's Talk Money. I'm your host, Saurabh. Last week, India completed 78 years of independence. And like many of you, I also heard Prime Minister Modi's message of Atmanirbharta delivered from the ramparts of the Red Fort. And it really struck a note. Atmanirbharta, self-reliance, the one thing that guards our independence. Now, it holds true for a country, and it definitely holds true for us as individuals as well. Self-reliance is the only way to ensure our financial freedom and our financial well-being. Over the last many years, mutual funds have become our biggest partners on this road to financial freedom. Small ticket or big, metro or non-metro, mutual funds have sparked the revolution, which is rapidly converting India from being a nation of savers to a nation of investors. And today, we take stock of where this journey is heading and what new innovations the mutual fund industry perhaps has in store for us investors. Well, I have a full house with me on the show today. So let me quickly welcome all of the mutual fund veterans. I have with us, of course, Navneet Munot, Chairman of AMFI, as well as MD and CEO of HDFC Asset Management. I have Saurabh Nanavati with me in the studios as well, CEO of Invesco Asset Management. And of course, we have Nilesh Shah of Kotak Mahindra AMC joining us, virtually. And again, in the studio, Sundeep Sikka, Executive Director of Nippon Life India Asset Management. Gentlemen, thank you so much for joining in. What a pleasure. It's a full house. And I think it's great to have all of you in because we want to really understand where the journey is going when it comes to mutual funds, self-reliance and financial freedom, because that's what it's all about, right? So tying in with this Independence Day month. So let me open with you, Navneet. Broad thoughts on when the whole aspect of mutual funds giving you the freedom that you need in your life. How do you describe, first of all, financial freedom?
So thank you, Surbhi, for having us. It's an honor and privilege for all my industry colleagues and me personally to be part of this industry over the last 30 years. It's a coincidence that we are also celebrating 30 years of AMFI. And it's been an honor for all of us to serve this industry and serve millions of investors. You started by talking about Prime Minister's message on Atmanirbharta. That's what he's been saying for the last few years. Yeah. And it's very important that in every possible way, each and every citizen lives a life of dignity. Government has done a tremendous job on creating that social security by supplying many things to meet their day-to-day needs, but at the same time, for financial security, it means living a life of dignity. It means ability to fulfill your aspirations. It means life without financial insecurity. And I think mutual fund as a product, mutual fund as a solution provider over the last couple of decades have worked very hard to provide that ability to each and every household that they can meet their financial goals, they can meet their life goals by investing through mutual funds. So benefits of diversification, benefits of convenience, and making it easier for every investor to create a financial freedom for themselves. So that's what our industry has been working under the guidance of our market regulator.
Absolutely, and for the average Indian citizen, moving away from just the concept of letting your money sit in a bank account, and that's the best way to ensure your retirement safety, security, etc., to looking at it in a very, very different manner from an investment lens. Let me bring in Nilesh as well. Great to have you on this discussion, Nilesh. So you tell us, let's talk, when we talk about financial independence, what is the definition? Is it X amount of money in the bank? Is it a 6-digit salary? I mean, how should a person really think of financial empowerment and financial independence?
Thank you, Surbhi, for having us over here. And financial independence is a state of mind. आपको जो करना है, वो आप कर सकते हैं. When you reach that state, that's financial independence. For someone, it could be 6-digit salary. For someone, it could be bank balance. For someone, it might be wealth creation. It's a state of mind which allows you to do what you want to do.
Okay, let me bring in both Saurabh and Sundeep into the conversation as well. So it's been a long journey. And most of your own companies have been around for, decades as well. So Sundeep, you tell us, what are the changes in the investor that you're noticing? I mean, just this year, if we see, the market has not been very charitable with returns. But you folks pull in the money every month. I mean, I report on those mutual fund inflow numbers, and the last number was a record high number. So your thoughts?
So Surbi, first let me start by, I think you mentioned about the Prime Minister's speech on the 15th, I think Prime Minister had this, Har Ghar Mein Taranga. I think today, we're happy to say, as a part of the mutual fund industry, we want to take it Har Ghar Mein Mutual Fund. So that is something what the industry is working towards. And I'm very happy to say, this is actually, it's happening. Today we can proudly say, almost every pin code of India, every district of India, we've got investors. And while the foundation of this was laid by the regulator long back when we started something called B30, and today we give credit, now on the 30th of our AMFI, we have crossed that stage of B30 to B300. And the reason why I give this example is this is the big change that has happened. Earlier, the mutual fund investors used to come from big cities and towns. Today, the fact is, I think coincidentally as industry, we opened our first branch in Leh. Now, that tells you where we are going. But the big change that we are seeing, the markets you mentioned, right, this year the markets have been flat. But the big change that we have seen is investors are maturing. 10 years back, when markets used to be volatile, the number of calls we used to get from investors in a call center, our RMs used to be very high. Today, the fact is when the markets have been volatile, people are investing more through SIPs because they understand, they need to time it out. You can't time it to perfection, but you need to spread out your investments. So that's a big change we have seen. And also another big change that we have seen, way back in 2000 when my father retired from government service, I had to convince him to invest in mutual funds. But last time my daughter started working, she asked me this question, which SIP should I invest? That is the big change. That is the new India, where young investors want to move away from bank deposits and come to mutual funds. And that is exactly what is going to make India Atmanirbharta, where every investor will be joining this journey of India growth story through the mutual fund industry.
Okay, well, absolutely. Fingers crossed and optimism galore. But Saurabh, every time the market falls, obviously this thesis gets tested, and till now retail investors have completely prevailed, right? It's just that now, and especially for people who probably came on the mutual fund investing bandwagon after COVID, this is probably the first time that their patience is being tested in terms of returns. Usually returns draw more inflows, draw more investors. But now, with what we've seen the last couple of months, do you think there is a bit of a test ahead for new investors, young investors particularly?
I think the new investors, the perspective has changed. This whole education which has been carried out by the regulators, AMFI as an association, the fund industry, I think is hitting home. And when you talk with these investors, they are coming with a 5-year, 10-year perspective. They are basically saying that, look, I want to participate. It's time in the market rather than timing the market. You may feel that the last year has been challenging from the index being flat. I think there are a number of funds which have actually delivered even double-digit returns, and that's where the active fund management part of the industry has come in. So if you analyze the flows, you will see those performing funds are also garnering the majority of the money because they have really stood out. Flat returns on the index, but a double-digit return on your mutual fund. That's a great outcome in that sense. So I think what has really changed is you go back 30 years, that first, Morgan Stanley mutual fund where people lined up thinking that 10 rupees will become 30 rupees. And come today when people are basically saying, look, I'm here for the long term. There is an NAV which reflects the correct market price. And I just want to stay put. I think that's the big difference over the years. Just one more aspect on this. The industry has gone through tough times. 2008 to 2016, I'm not sure if but the numbers will show that retail investors were leaving the industry. They have started coming back from 2016 onwards. And I think this time it is for the right reason.
That's interesting, Saurabh, that you're saying that the lessons seem to be getting learned very well. So Navneet, you tell us, in your experience, and I'm talking about the recent past, the last 2 years, 3 years, post-COVID, what is the one trend that you've noticed in terms of investor behavior that really stands out as a change?
If I can use one word, I think it's resilience. Over the last couple of years, notwithstanding the volatility, what we are seeing is a resilience among investors, maturity among investors, and across all kinds of investors. Sundeep talked about more and more investors joining from smaller towns. He talked about, Saurabh talked about the younger investors and the behavior that's changing. I think that's one of the biggest change. Investors understand that life expenses are increasing, life expectancy is increasing in terms of number of years, and life expectations are increasing. They need to invest more and they need to invest for longer term. I think that's one of the biggest, I would say, trend that is clearly visible over the last couple of years. And we have seen, like last month you gave the example of July, where markets were not doing well. I think you had all kinds of news flow which led to volatility, but despite that, investors kept the faith and increased their SIPs.
You know, Nilesh, on this point, you know, domestic investors are all coming in, keeping their faith for the long term, and that money has been pouring in. The argument that's often made is that is it going to, not really a bubble, but is this going to create its own, you know, repercussions? Because domestics have been buying at a time when foreigners have been selling, when insiders have been selling, private equity has been selling. So sometimes you feel whether retail could be, you know, a little vulnerable in an environment like this.
Anyone who believes there is a bubble, will he be willing to short the market at current level for 10 years? Most will say no. For 5 years, answer will be no. For 3 years, answer will be no. Let the action speak louder than the word. Now let's look at from a consumer point of view. We as Indians prefer short-term gain over long-term pain. There is 9 out of 10 speculators losing money in retail on speculation F&O as per SEBI's report. About 1 lakh crore is lost over there. In the gaming, again, 1,20,000 crore is lost. In the lottery, sellers make money, not the buyers. But there are states where people put more money buying lottery than buying equity. If you look at Ponzi scheme, even in Mumbai, in Taurus, a jeweler, you know, bankrupted people. Now, all these people, if they invest in lottery, Ponzi, F&O trading, gaming, crypto, people have no problem. But when they invest in mutual fund, yes, in the short term, they could lose money, but in the long term, they will make money. Now, should we go for short-term gain and long-term pain, or should we go for short-term pain and long-term gain? So from a consumer point of view, investor point of view, as well as from a commentator point of view, mutual fund sahi hai.
Okay.
So
Sundeep.
come in here. You know, it's many times this assumption is there that foreigners are selling, foreigners are more smart, Indian investors, retail, like we said, are they gullible? But the data shows something very different.
Not just foreigners. Indians are selling. Indian promoters, you know, Indian venture capitalists or private equity who were holding the stocks earlier.
Let me use all the retail investors, let them see them as a stock. And when we have a lot of retail investors, we have done this analysis many times for our own database, you know. The smallest of investors, the retail investors, actually have made the maximum money.
On that note, we're going to take a very quick break. On the other side, we want to find out from these gentlemen what the future holds for us investors. There's so much changing with respect to regulation. The industry's been given some more freedom to, you know, offer differentiated products as well. So what does it mean for us? We'll find out after the break.
Let's talk money.
Welcome back. Here with us on Let's Talk Money, and this week we're talking about what the mutual fund has in store for us in our journey towards self-reliance, Atmanirbharta and financial independence. And we have, of course, industry veterans with us in the studios, as well as Nilesh joining us virtually. So gentlemen, now I want to talk about the future, because the future does look very, very interesting. You know, almost every couple of months, we have new regulations coming in, some of them to tighten up the screws on the industry. But these days, there is a lot of talk about offering more flexibility as well. So I want to take that up with the panel. And Saurabh, let me start with you. The latest consultation paper that I read through had a lot of, you know, different aspects that they were talking about, allowing funds to perhaps invest in other areas like REITs, equity funds to invest in, you know, things like REITs and gold, etc. There is, you know, also talk about looking at value and contra funds. How do you limit overlaps and yet let the products be out there in the market? So let's just start right there. when it comes to investing in things beyond equity, is the time right? Is this something that the industry would want?
So great questions would be, let's first start at the core of what you mentioned, different asset classes. And here, I think we need to understand that mutual funds is not synonymous with equity investing only. We need to understand that it's a vehicle which basically is giving you the option to invest into every underlying asset class. So it's equities, it's debt, it's gold, silver, international equities, REITs, InvITs. So it's actually a medium in which you can get exposure to whichever underlying asset class you basically can get into.
On that, actually, I should request our director and producer to throw up the stat. So let's understand how the industry also stacks up right now, because these are the latest numbers. The total industry AUM of close to 75 lakh crores. The largest still is equity. Over 33 lakhs is equity. The next big category, of course, is fixed income debt. That's about 18 to 19 lakh crores. And then there is the hybrid category, which is now growing and gaining popularity and prominence as well, over 10 lakh crores in hybrids. And then a bunch of other things, and there is passive investing, and we'll come to that as well. But that's the current breakup. But you're right, absolutely. Mutual funds, can be investing across a diverse range of assets. So as investors, what further innovation should we expect from the industry?
No, I think we are getting into the asset allocation era. The more the education, more people will realize that it's important to allocate correctly in different asset classes over a period of time, over a longer period of time. And that will reduce the risk of your portfolio, but it will give you better risk-adjusted returns. I think, increasingly going forward, you will see more focus on multi-asset allocation, retirement plans, as there's a percentage of population which starts getting old, and I'm living longer. So I need money for a longer period of time after retiring, which is the best instrument, and how do I go about that? All these concepts will start coming into play very, very soon at this point of time.
Navneet, on retirement, great that you brought this up, because again, as part of the same consultation paper, SEBI is now talking about some more flexibility when it comes to retirement products and also products for children's planning, these children's fund. And as of now, these are called solution-oriented schemes, by the way. It's a very small paltry sum compared to the overall total. So what will it take for these products to really take off? And how do you make it less confusing? Because for an investor, I want to save for my retirement. Now flexi cap fund, regular diversified large cap fund, or a retirement product. I mean, how does it become easier for the investor to decide?
No, I think it's quite a simple product. Over the last 30 years, I mean, we just talked about there are lots of changes coming. But I think the thing that we take pride in is the continuity that has been maintained. There are so many products that all of us have been running, which have been around for 20, 25, 30 years, and they've done tremendous amount of wealth creation. At the same time, as markets evolve, as India grows from 4 trillion to 10 trillion, 10 to 20 trillion, there would be different kinds of aspirations of investors, expectations of investors, newer asset classes are emerging, and SEBI has always been forthcoming, proactive in terms of ensuring that mutual funds can take access to those markets, can provide a better solution to the investors in terms of accessing those asset classes, and which is what Saurabh talked about, where be it the investing in the gold and silver or money market or solution oriented products or equity products or hybrid products. I think it's we consider ourselves a solution provider for any kind of life goals that you have. You have a solution from the mutual fund, right from parking a short term cash surplus to income generation to a long term wealth creation.
But that's what I'm saying. It's still confusing, right, for an investor, because retirement objectives can be achieved through a diversified fund as well.
You need a good, you don't need, but on a sarcastic note, you need a good advisor.
Financial advisor to perhaps handhold. Fair point. But now let me take up something a little contentious. And, we at CNBC-TV18, particularly me, looking at Let's Talk Money, the focus is only the end investor, the retail investor. And there I want to ask a question to our entire panel. Let me start with Nilesh on this. Nilesh, NFOs and thematic and sectoral funds. I know you already know the question that's coming, right? Because this is where the bulk of the money has been coming. And even in the last numbers, so through the last couple of months, actually, lots and lots of new fund offerings coming in, many of them on the sectoral and thematic side. And this is where SEBI is now also talking about ensuring that there are not too many overlaps. Now, how will the industry perhaps look at balancing its own need to create more products and get more flows with the need of investor experience not getting soured? Because many of the NFOs do end up coming in pockets where there's a lot of exuberance in the market. So from an industry perspective, how do you look at this trend? And what is your message? What will be your message to investors as the distribution machinery continues to push the NFOs forward?
So to investor, my message is simple. You don't have to buy NFO if it doesn't meet your objective. Just because there is NFO doesn't mean that you have to invest into it. Now, assume mutual fund as a restaurant. We first started with basic dal, roti, chawal, sabzi. That's where our diversified funds came into play. And there are 9 categories of diversified fund, from large cap to multi-cap. Now, beyond that, there is need for sectoral and thematic funds. There is need for newer quant-oriented funds. There's need for hybrid funds. But investor must choose only those products which are required by them. We as distributor will try to expand our range because we want to reach out from 5 crore investors to 25 crore investors. And to reach out to that number of investors, we'll have to create a range of product. And there are many people who say, oh, but NFOs open at a discount. So please show me any NFO which is still at a discount after 5 years of investment. When we launch product, we recommend people to follow asset allocation. We recommend people to do investment via systematic investment plan. So people have to exercise caution while investing in NFO. And we do mention investors to come with long-term horizon. If you are doing SIP, you are doing asset allocation, you are investing long-term investment, you will make money.
Okay, all right. So basically the onus is on us investors, and I'm not shying away from that at all. Ultimately, we need to ask the right questions and make sure our investment objectives are met. We're unfortunately out of time. So I want to take 10 last seconds from each of the panelists. Because this is Let's Talk Money, you have to give us your personal money mantra, your personal money / investing / personal finance tip that you follow or you tell your friends and family to follow. Sundeep?
So, Surbhi, I think from my point of view is keep it simple. Don't invest in something that you don't understand. Don't invest in something with the layers where you can't see where you're investing.
Okay.
And to your earlier question, I would personally stay away from thematic funds.
Oh, there you go. He's saying he's not looking at thematic. So it's what works for you. Know your risk appetite and know your objectives. Got that. Keep it simple. That's his message. Saurabh?
You need a good night's sleep. If your investments basically are going to keep you awake, if you have to keep watching the mobile phone for your NAVs or the price movements, you have invested in the wrong products.
Okay, so invest for a good night's sleep. That's a very interesting line. Navneet?
2 things. One is there is only one formula of wealth creation, that is sound investment plus time plus patience, nothing else.
Sound investment plus time plus patience.
I think if you don't have these 3, then you won't create wealth in the long run. It will be very, very difficult. And second is the people on this panel are the ones who take tremendous joy in making money for other people than only thinking about ourselves.
Okay, absolutely. Nilesh, final word and your investment mantra and tip as well.
Mutual fund sahi hai.
We've heard that before. Ek naya wala bhi.
So I will just say about mutual fund industry rather than money mantra. हजारों ख्वाहिशें ऐसी कि हर ख्वाहिश पे दम निकले. बहुत निकले मेरे अरमान, फिर भी कम निकले. We have done a lot in last 30 years, but we have a long distance to cover to ensure that every Indian is financially secured.
Wow, very well said, and what a poetic note to end on. Thank you very much. Great conversation, gentlemen, and quite an enlightening discussion as well. We hope that all of you and your peers keep powering forward so people like me, people who are watching the show, can go ahead and realize all our financial as well as life goals and dreams. Thank you so much.
Thank you.
Thank you, Saurabh.
Well, with that, it's a wrap on this edition of Let's Talk Money. Thank you so much for joining in. Keep sending us your comments, feedback, and queries. See you again next week.
Let's Talk Money